It's a global financial crisis, and this is perhaps the third, banking failure that we are looking at in the history of U.S. banking system. How do you assess the impact of the fallout of SVB crisis on India, the startup world, which is heavily dependent on SVB, and the Indian markets as well?
See, the Silicon Valley Bank bankruptcy is a very big kind of a problem for the U.S. markets, considering that it was one of the top 15, banks in the United States of America. And I think the good news which came today in the morning was that Fed has promised that all the depositors in SVC will get all their money back. So I think there's not going to be any liquidity crisis as far as the depositors are concerned. Of course, investors who have invested in the equity of SVC are obviously not going to get anything. But coming to the to the bankruptcy crisis, I think two U.S. banks going up, SVC getting bankrupt, Signature Bank also going bankrupt, is definitely not good news in the very near term.
Hmm.
Sentiment has obviously got impacted significantly. The only positivity about this development is that the March 22nd Fed meeting may not see a very sharp rate increase what people were
Yeah.
expecting earlier. Earlier, the expectations were 50 basis points. I think what we are hearing now is possibly it could be a 25 basis point hike or maybe a pause as of now, considering that already a lot of damage has been done in the US economy. As far as the Indian markets are concerned, Sakshi, I think the startup companies, companies like Nazara Technologies have already mentioned it to the exchanges that their
Sure.
subsidiaries had about 64 crores in these companies. Plus, Paytm also clarifying that none of their equity investments are now held by SVC. So I think
Hmm.
in the Indian context, the sentiment damage may be there, but in terms of the collateral damage, I don't think it's going to be a significant number. And I think markets are over amplifying the pessimism in the Indian equity market. So I think it's a matter of time before we see a gradual recovery to the stable zone. And possibly today also the markets are just wondering what could happen on the 22nd, because in
Yeah.
despite Fed approval, the markets seem to be quite jittery. So I think this till that time the markets are going to remain extremely volatile. And
Hmm.
just to make it specific, 17,200 is going to be a very crucial support number, at
Okay.
least in the near term.
Okay, 17,200 as a crucial support in the near term. That's what you should watch out for in case you look at levels before investing in the Nifty index as well. But Mr. Gorakshakar, one more question that comes to the mind is what happens to the flows in emerging markets like India? We've already been seeing the FII flows being quite, volatile. Of course, March 1st to March 10, we have seen some flows coming in, but that also again change with this kind of a changing scenario in the banking system and the financial crisis, which could perhaps spill over, and we are just waiting for how things will pan out over the next course of few days. Although for now the government has stepped in to see any kind of contagion spreading out and the depositors, and to calm the nerves for sure, but we do not know how big a problem could this turn out to be. But in the emerging market flows and Indian market flows, how will that get impacted?
No, I think you're right. FI flows could get impacted in the very short term. And traditionally, Sakshi, you must understand that March has always been a very volatile month, not
Hmm.
only from the point of inflows, but even domestic investors, normally square off their transactions, settle their accounts. So March is going to be a very volatile month. So we
Hmm.
could expect, this kind of volatility or maybe some sort of underperformance or some sort of continuous selling in the market. Still, we can complete the month of March. Hopefully from April onwards, I think things should settle down. And I think if there are no negative surprises, any further negative surprises, I think the
Hmm.
market should definitely look at this positively. I think you would probably get a clear sense of this, after the 22nd Fed meeting,
Sure.
because the Fed will definitely pinpoint, what is the state of the US economy in terms of the banking sector, because, people definitely would not like any further negative surprises. That is very clear.
If you like the video, do like, comment, share and subscribe.